I like your background, Glenn. Is that the Diwali background?
It is. I'm just trying to change it now since it's already over, and realize that I don't change my background on Zoom until I dial in for Fridays with you.
Yeah. Oh, yesterday I absolutely crashed with my bronchitis. I was slept most of the day. I'm feeling much better today.
Are you getting through it? Because you've been
Yeah,
struggling with it for a while now.
it's been about a month now. Yeah, I find days that I get enough rest, I'm doing okay, and I get better. And days that I, stay up till 1 a.m. the next day, I just crash. So rest is the key, I think.
Mm-hmm. Yep. Despite all of the chemical combinations we've been able to create over the centuries, humankind still ignores the fact that we're told what's the best medicine for us, which is sleep.
Yeah. Let's see. I am pretty sure that I know how to make us go live on Facebook. I'm actually having the difficulty that I set up a meeting in Facebook, but then through Zoom, if I want to go live, it sets up a second meeting and goes live. And I don't have any way of connecting Zoom to the meeting that I'm already advertising. I don't know if you happen to know how to do that.
No, I'm not a Zoom aficionado, unfortunately. I will say, however, what's been happening lately is there's two levels of registration now. So there's the ERG within Intel's framework to get connected. And then once you've got that approved, you then have the re-registration into Zoom to get the link from Zoom.
Yeah.
Is there a way to in that construct maybe go from ERG to Facebook and live from that model?
Yeah, we could. Of course, I don't know that everybody here at Intel would love to go over to Facebook.
Yeah.
But they'd probably rather go just to Zoom, would be my guess. Today I enabled the waiting room, so I'm letting everybody in one by one as they come into the waiting room.
Hello. Why does Intel people don't want to go to Facebook? I'm new to Intel, so maybe there is some history.
Oh, just people have all sorts of opinions about Facebook. I've had a lot of people say that I don't use Facebook. I don't want to go there. And but then again, some of the same people, actually the same people that have said that have also said that, I'm retiring and I want to find the group, but I don't have access to the Intel network. So how do I find the group? And I said, well, we're going to start putting our events on Facebook too. So I'm going through right now. I'm running into the difficulty that I can create a Facebook event, but when I'm in Zoom and I stream live to Facebook, it creates a second event. So if I want to advertise it ahead of time, I can do that on the first event, but it doesn't get all the people that register there to connect to the event where it actually streams. And I don't have any way of creating that event ahead of time if I'm streaming from Zoom, as far as I can tell. So we're just going through some growing pains, trying to figure it out. Oh, here comes our speaker. And now that we have our speaker in here, maybe I will find out how many people we have coming into this meeting. Hello, Whitney. Oh, you're on mute.
I'm muted. That's not going to work. We're not going to have much of a conversation that way.
No. So we have 162 people registered. We tend to get, it used to be about 50%, but now we're going, used to be about 60%, but now we're sliding down to 55, 50-ish% coming in. So of registered attendees. And we're also piloting something that's fairly new. Last week was our first week that we started streaming to Facebook Live. And it's not any longer an Intel internal event.
Oh, cool.
Yeah, I've had quite a few people say, hey, I'm retiring, or I had one person come to me and say, I'm going to Google and I still want to attend your event.
Oh, fascinating. Okay.
So we're trying to make it publicly available. But we're walking a little bit of gray line doing that.
I hear ya. I hear ya. Well, you know, we still got a couple minutes. In my personal experience, people join late. So
Yeah, we tend to have people joining for about the first 5 minutes after. So
no worries.
I will start the live feed to Facebook. Why don't I actually do that now, just because I am so new at doing it that it usually messes up. I don't know if you know how to do this, Whitney. I have the problem that maybe you do, maybe you don't. I have the problem that with a Zoom, when I start streaming to Facebook Live, it creates a separate event from the one that I had already created and tried to advertise. So if I want to advertise it ahead of time, I create an event, but then I can't connect my Zoom to it. But if I create it later using Zoom, it just creates it and live streams it. So I'm not sure exactly, and I need to
I've done one
mute my phone. Sorry.
Facebook Live, and it was a disaster. Like, it was one that I was running on my own, and oh my gosh, like every technical issue that could go on would happen.
Hey, now you use Webinar Jam a lot with passive investing, right?
No, no. So the landing page is ClickFunnels, but I just use Zoom. Yeah.
Okay.
But I am familiar with Webinar Jam. I mean, you know, I don't know. I like keeping things simple.
Oh, I do too.
I get all the bells and whistles. I understand why they're there, but I'm just I like creating content. The tech piece is just not my thing, not my jam.
I don't have that excuse because I'm an Intel person, but I do like creating content. Let's see. Okay, we are going live to Facebook. And I've actually enabled the waiting room for this particular one. So I'll be admitting people.
Okay.
Welcome everybody to our REI group. This is an REI group for busy professionals who are looking to improve their real estate investing education. And today we have Whitney Elkins Hutton. Pardon on the name. We're going to be waiting a few minutes to let other people join the group since this is live. And you'll just hear a little bit of banter until we get onto our topic. But welcome to the group, Whitney.
Yeah. No, thank you for having me back. I'm so excited to discuss today about car washes and just kind of give you guys the down and low and the dirty. Kid it. Dirty. Yeah. Anyways, on car washes, I got to work on the delivery of that joke. Sometimes I hit it, sometimes I don't.
Well, you know, I have to admit that in my own real estate investing, I have been looking very heavily at commercial real estate. That's been my bread and butter. But you know, when you're looking at, you know, multifamily, for instance, the income that is fueling that multifamily business is the income of the tenants. But there are a lot of other types of income that could actually fuel a real estate business, and that is, you know, buying a business that actually is on the land. And I love this model because some businesses are recession resistant, some are not. Mm-hmm. And if you buy a business with the real estate and you have a recession resistant business like car washes, you have a source of income that will fuel your real estate purchase. And so it's something to think about. Tenants aren't the only way to fuel a real estate purchase. Having a business on it is too.
Absolutely. And also it gives you flexibility. And we'll talk a little bit about that as far as the exit, but you know, one of the things, you know, if you own a business and you don't own the land, you have like a lot of risk involved. Like what happens if the landlord sells the land out from underneath you, what, you know, to a developer, what happens if they raise the rents and now like your profit and loss statement is thrown off. But conversely, if you own the land, maybe now you can sell the business, right? And lease back the land. And there's all, you know, again, it just adds like another kind of bow in the quiver as far as like how to, you know, make an income off that land, but also, you know, gives you another one or two exits that a lot of people haven't thought about. Yep. But we can deep dive into all that. Just let me know when we're ready.
Oh, I'm rapidly admitting people from the waiting room. I accidentally hit remove on one person. Please come back. The buttons are right next to each other.
Daniel, if you need help hosting, let me know. I'm happy to help you admit people.
Oh, okay. That would be wonderful, actually. Here, let me
There should be like
promote you.
an omit all too, unless you're just trying to keep
Oh,
people.
yeah, I'm just hitting that over and over as people are joining.
Excellent. Well,
right.
it looks like I can share my screen. Are we ready for me to share my screen?
Yeah, and let me just say, first of all, this is your second time back within a month, actually, which is pretty rare in our group. So we like you and welcome back. And I also wanted to say that it's been our thesis in this group for over a year and a half, almost 2 years, that we're probably going to be, heading into rocky real estate times. But if you've got long-term debt, cash flowing properties, you'll be able to weather those storms. And so I would love to hear about your business model for buying a cash flowing business and having it fund your real estate. And in particular, how that's going to get you through, turbulent economic times. But, welcome to the group here. I'll let you go with your presentation.
Yeah, no, definitely. And I was actually, right before this, I was writing a blog for another organization around, inflation and recession. And, really at the end of the day, the economists don't even know. Some people say we're in the recession right now. You listen, I just heard a wonderful talk by ITR Economics, their lead economist, that says it's still going to be another 18 to 24 months before we feel the full impact of what the Fed's done with raising interest rates. So the recession's not even here yet. We still have another, 18 months of like good times. So really at the end of the day, what that tells me is that we have to learn how to invest in assets that have core principles to where they can actually, ebb and flow with nearly any market. And, last time I talked a lot about the 7 wealth builders as well as the opportunity costs. I'll touch a little bit on that at the end, but today I really wanted to focus on the asset class, which is how to invest in cash flowing express car washes. For us, what we do cash flowing, because I'm sure some of the people here have heard of us at passiveinvesting.com. We also do development. I'm going to focus just really on the operational side of car washes. We can maybe towards the end, save the development questions towards the end, just so we aren't confusing people. But, if anybody wants to, connect with me afterwards, you don't have to wait until the end. Here's my information right here. I'm the director of investor education here at passiveinvesting.com. There's my email. If you want some free goodies, I have a passive investing playbook and checklist, and you can you and I can jump on a one-on-one call. And I just talk about all things real estate, really. You can, get access to that at passiveinvestingwithwhitney.com. But really, you guys, some of the people here know me, some of them don't, but I'll just give you like a little 2-minute recap of me. This is the whole reason why I invest in real estate, is me and my crazy crew here. Really, I started off real estate investing in 2002 completely by accident as a, I guess they call it live-in flipping and house hacking. I had a house, I bought it with significant other, relationship fell apart. And what do? I stuffed it full of roommates. I had to, redo like every bit of that house, down to some psychedelic flowers that were painted on the wall. That was fun. Get those all off of there. But really what that first property taught me is that I could create value that was unhooked from my time. And I feel like I'm kind of preaching to the choir. That's why you guys are here, is to learn how to invest and passively invest in and grow your net worth or your cash flow, or hopefully both. But fast forward, I learned to start holding on to these properties, and we built up a portfolio of over 30 properties, still doing about 10 flips a year. And then we had a daughter, and I was taking care of family members. And that's really when it hit me, is I need to actually learn how to scale even further. Not only the number of units that I'm picking up, diversification of my investments, and to do it passively. Because I knew right then, anytime you bring home a baby, like, you had the day before you had all the time in the world, and then the next day it's like you don't. Like, that time is now been diverted to another being's priorities. But really, this whole journey, the culmination, my husband and I, we have over 6,300 residential units. This is multifamily, mobile home parks, residential assisted living. We have 1,400 self-storage units. We also have car washes. We have other types of investments outside of real estate, but real estate is our core portfolio. And the result that it's given us is 100% freedom of choice on how we spend our time. I am here doing in my role like as educator because I love doing it. I'm so excited about it. I can geek out about real estate. My daughter's in the other room. She can actually probably go through every single one of these conversations verbatim at 10 years of age. But at the end of the day, she's like, Mom, please don't talk about real estate anymore. I'm done. I'm done listening about it. So, but we can help you do this here. If this is your goal to have freedom of choice on how you spend your time, you know, be location independent, how you create impact in the world, we can help you do this here at passiveinvesting.com. We've got some strong numbers. We can talk about that at the end as well. But again, what we're here for today is to talk about car washes. If I touch on any sort of financial, tax, or legal advice, guys, it's educational only. You got to take that, anything that I say, back to your team before you make any sort of investment decision. So let's start off with the numbers. Let's see here. Oh, there we go. Okay, so really, the car wash by the numbers, it's a $33 billion industry. Once the habit of, you know, more than 43% of the people, you know, in the United States wash their cars. Other people that wash their cars, you know, they actually use car washes. Okay, sorry, and I kind of stumbled over that 43%. I created this like cool little slide, and you know, it's kind of thrown off my narrative a little bit. But of the, you know, the drivers that actually use express or use car washes, 51% of them actually love the express model over self-service or full service, and we'll talk about that. The average user actually washes their car about 13 times a year, which means there's, you know, ultimately 29,000 express car washes in the United States serving all these people that are washing their cars. There's some other metrics here that gets into kind of the nitty gritty of like, you know, how the car wash is used. But really, this $33 billion industry is growing year over year by at least 3.9%, with the express part of the car wash actually being the highest growth, you know, seeing the most growth. So we're actually probably, you know, they don't tease that out in the research. That I think in the next like 2 or 3 years, as we see big equity get into this arena, we're going to be able to see that kind of breakdown. And, you know, we're estimating, you know, just looking at our holdings, we're estimating that growth of the express car wash business is like over 8% and escalating. And there's heavy margins in this particular arena, especially in the express car wash, you know, of over 40 to 60%. And I'll show you how we're able to achieve that. Now, again, really, I want to pull this together because this really means the industry is ripe for disruption. Okay, you know, and if we get down to the customer, we're talking about this being recession resilient. The customer really is what's driving this being recession resilient, and it goes back based on the behavior that's already established. And whenever people are in tough times, do they take better care of the car or worse care of the car? In 2008, 2009, in 2011, and also through the COVID pandemic, you know, the data proved out that they actually take better care of the cars, because it's harder, you know, they can't get lending to go get a new car. It's harder to get lending. Maybe they don't have the finances to go get a new car. And it's just like fear. It's just not right time to go make a major purchase like that. So they take better care of their vehicle. We don't see, especially in the express car wash arena, we don't see really much disruption to the income in this area, because, you know, even with its on being a subscription model, it's about $35 to $45 a month. That's really not where most people are going to trim their expenses. They're going to trim it in other areas like lowering their housing costs or insurance costs, groceries, utilities. They're not going to trim it in an area where they actually need to maintain that asset. I mean, I use asset in quotes. We all know that car's not exactly an asset, but it is an asset for most Americans to be able to get to and from their business, location of work, as well as get their, you know, just get around town, you know, live life in general. But Now we're talking about the actual location. The location, there's a lot, this industry is ripe for disruption because right now, majority of the people that are actually in the car wash arena only own 1 to 4 locations or 1 to 5 locations. So we call these mom and pop owners. And I really want to kind of like turn everybody's attention back to what self-storage was back in 2008, 2009, 2010. This is much like that time back then. So really, this is an industry that's ripe for disruption. We love the express car wash, and I'll show you one here. There's one of our assets. This is actually closing on 11/10, just here in a few days. But we're really focused on the scalability of this model, because the scalability, you don't get that with other types of car washes. So if you guys don't know of other types of car washes, you can have the in-bay do-it-yourself type car wash. This is where you take the car in, you drop the coins in the machine, and you're scrubbing your own car with the brush, and you're praying your 10-year-old doesn't spray you with the water hose. Then you've got in-bay automatics. And this is probably the car wash that's attached to a gas station, or maybe like a tunnel that's just, 2 or 3 cars long. Anybody that, has sit in one of these type of car washes, you get 4, 5, 6 cars back, you're probably going to, either head across town to another car wash or skip the car wash altogether for that day. Then you swing into the other direction, you have your full service car washes. And, these are going to be car washes. Maybe it's a 30 or 40 foot long tunnel, but you've got somebody that's jumping in and doing the vacuuming of your car. It goes through the tunnel, and then at the end, you've got a whole army of people that are drying the car and, maybe putting wax and shine on it as well. Those are extremely labor intensive models. But really, when we have this express car wash, everything is as automated as it possibly can, aside from the vacuuming. And really, this gives a lot of scalability to this type of asset. Now, I want to talk about, one more thing here. I just wanted to show you what one looks like. In this model, we talked about the scalability, but when we talk about investing specifically in express car washes and why it's so scalable, another thing that we can do with this is shift it from linear income to residual income. And that's what most of us are trying to do here with passive investing, is that we're trying to actually, amplify ourselves, right? Make our money work for us. We can do this within this particular type of, location, because, an express car wash, you might have 2, maybe 3 full-time employees total for the whole entire location. Yet you can wash 400 to 500 cars a day at this type of location. And then we can scale it even further by adding monthly recurring revenue to the location. So moving this model away from, paying individually every time you go wash your car, to having a subscription model where the customers actually subscribe for, washing their car. Maybe it's $25, $35, $45 a month, depending on the package that they have signed up for. And the higher the package, the more perks they get, like tire shines, they get a VIP line, maybe they get like, some sort of, other amenity that we have on the property. But they get a lot of value even at that introductory price. Now, again, that it's affordable, it's recession resilient, because most families, that's not where they're going to cut their expense, because they need to maintain their car. But on top of that, I think a lot of investors, their mind goes, well, what is the margin here? Like, when do we start losing money? Like, what if somebody comes in and washes their car every single day? Even we had this data before we even got into the industry, but even just proving out with our current locations, our average subscriber, washes their car 1.8 times a month. However, and we're talking about the chemical cost, the water cost, the electrical cost to actually wash that car is 80 cents to $1, depending on the location. Okay, now what we don't have in there is the labor cost, but all of those things, you know, they don't cost that much. There's a hefty margin in here, but we're providing value because we can get them in and out in under 5 minutes to wash your car. I don't know about you. If I choose to wash my own car on the weekend, I'm spending a lot longer than 5 minutes. And for most people, that's money and time well spent. And also another way that we can disrupt this industry is that it can be technology enabled. So we're actually moving this to where, you know, people can actually sign up on their cell phones. They actually can hold their subscription on their cell phone. They can modify their subscription on their cell phone. It also allows us to collect data and be able to market to that customer about certain specials, or, you know, if we need to kind of, you know, drive subscriptions in a particular month because it's down, we actually have that data to be able to do that. And a lot of mom and pop owners don't even know who their customers are. They have no idea. So they're having to do broad marketing to, like, you know, 80,000, 100,000 people living in the metro area. We can get very specific and even market down to people, you know, that are truly our customer. And we can talk about some of the environmental advances in this industry, you know, here later towards the end. But I want to show you guys how this stacks up against my 7 principles for investing. You know, first, number one, how are we doing it? How do I like doing it personally? Is investing in areas that have, you know, that are going to help protect capital. And number one is, like any sort of commercial real estate, is you have to be, you know, you can't move it. It's illiquid, you can't move it. So it has to be in a growth market. It has to be in the right sub-market. But even more importantly, for a business like this, it has to be on the right corner in the right market with the right traffic count coming past this location. So this is very much like what you have to do with a retail business. So this is where it differs a little bit from, you know, just residential commercial real estate, or maybe even self-storage commercial real estate, is that it is actually a business sitting on top of the land. And so you have to buy the right location. Cash flow wise, we talked about the scalability of the asset, why express car washes, you know, generate the most cash flow. Another thing that we have to take into account here, there's different types of car wash investments out there. I've seen them. But one thing that I really encourage people to understand is that you need to own the land and you need to own the brand. And so I would challenge people to look for direct ownership type of opportunities where the land is being owned underneath it. Again, much like we talked at the very beginning, but for those people who joined a little bit late, you want to make sure that if you own the land, you know, nobody's going to raise the rent cost on you. Nobody's going to sell the land out from underneath you to some sort of other organization or a developer. So we can check that box. But two, it also gives you another exit strategy. So if you decide to sell the car wash, you know, maybe you could just sell the business and you can keep the land, and now you're renting the land. Okay, so it gives you another flexibility in that asset strategy. It also gives you another cost center for appreciation when you go to sell the business. But the brand, I think this is where a lot of people sometimes don't quite understand that you want to own the brand. You want to have a direct ownership model because when you get into franchises, you don't own the brand, you don't own the brand standards, and you don't own, you're not able to control how the brand standards are executed on different sides of town. So if something happens at a different location, it can really impact your business, even though you guys, you know, in a franchise aren't actually directly connected through ownership with each other. Now, equity growth. This is one of my third major pillars for investing. We touched on that this is early consolidation. Much like self-storage, we're entering this at a prime time to be able to really disrupt the market, consolidate a lot of these car washes. But the reason why there really isn't anybody that owns more than 4 or 5 locations is because they might have picked up a car wash, and then they realize, oh, I'm now the operator. Okay, there is no third-party management. And this is another reason why we haven't seen big money get into the space yet, is because there's no third-party management. And so one of the things that we are doing here at passiveinvesting.com is actually solving that issue for third-party management. So not only do we own the land, we own the brand, we actually own the management company. And we're building that out to be able to service our locations. We're scaling to about 300 locations. And I'm going to talk about the exit here in just a second. But that is something, I know I've talked to several people that have been interested, like, oh, express car washes is amazing. Let me hop on the phone with you. And I want to learn how to buy my own and run it directly. Well, you're buying a business now that you have to operate. It's going to be quite a long time before you can actually place that with a third-party management company. And even the barrier to entry to own your own location, I think I looked it up, without the land is about $1.5 million. And so there's a very high barrier to entry here. Now, we've already touched a little bit on the expected gross income levers. And for people who don't understand what that term is, if you're familiar with multifamily real estate, it's pretty equivalent to net operating income, but that we value the assets that we're buying and exiting on expected growth, multiples of expected gross income. And one of the, like commercial real estate, there's three things you can do. You can increase income, decrease expenses, or add additional streams of income. And that's what we're doing with this business. We're adding income by moving it from a direct pay model to a subscription model. We're creating all sort of operational efficiencies at the location level, but also through scale on, acquiring and developing so many locations. We can buy in bulk. There's so many things that we can do between that and the management company. And then we can also add additional amenities. One of my favorite amenities that I've seen at car washes, and one thing that we do is that you actually add a pet wash to the car wash. So how frustrating is that to go wash your car, but your dog's still dirty? So yeah, now you got to put a stinky dog in the car. So for me, I have a dog, she's snoozing right here. So, it's one of the things I'm very passionate about. I'm like, that's wonderful. Go wash the car and the dog all in the same day. We can actually make that an additional amenity charge, say $10 a month. And it'll really only cost us $200 total to put in the infrastructure, for that type of added amenity. Now, for car washes, there's really three types of exits. Number one, what is available for most people getting in the space is going to be individual sale, especially if they're at a franchise model. They're going to be at some sort of individual or small portfolio sale. We actually underwrite our properties this way. We feel it's the most conservative way to present our numbers to investors. Another way to exit is to kind of, roll up and sell to a larger private equity firm. Individual sale might yield you 2 to 4x equity multiple. A larger private equity sale might, yield you 4 to 7x equity multiple, depending. We really haven't seen that yet. That's just kind of a predictor. What we have seen successful is an IPO. But it does mean you need to get to over 250 locations in order to IPO successfully. But, modeling in an IPO puts the equity multiple exits closer to 14 to 20x equity multiple. So this is a great arena for those people who are looking not only for cash flow, but a way to really accelerate wealth build. This could be a good asset for people to consider. This is the picture on the right. This is our brand, the Hurricane Express Wash brand. We have two brands. We have we have Sparkle, and I'll talk about those more in a minute, but I just wanted to point out that picture. Let's talk about the tax benefits on car washes, especially express car washes, is that there's really good tax benefits to this because you can depreciate all the equipment in the building through a cost segregation analysis, through accelerated depreciation and bonus depreciation, and create really high year one losses on the assets, probably much higher what you can do on multifamily, definitely higher than what you can do on self-storage. So there's some amazing tax benefits here. those tax benefits operate, especially if you're investing passively, operate like any other passive investment. Inflation hedge, we talked about the subscription model. We talked about the cost per wash. Again, this just wanted to make sure that everybody understands that that doesn't account for labor. Labor is going to differ by location. But there's, again, good margins in this, but we can actually, the reason why I love the inflation hedging aspect of this type of asset is that we can actually manipulate or modify the subscription cost in response to what's happening in the market. We can go up, we can go down. We have really adjustable operations here. And that's not only in the cost, but also, we can adjust, and this is anybody that owns Express Car Wash, you can adjust the speed of, if they built it correctly, they can adjust the speed of the tunnel, how much water is being used. Are they using recaptured water? They can adjust the use of the chemicals. And so you can really kind of scale up, scale down, the different operational efficiencies of the asset. All right. I just want to touch on this because the last time I presented, I got a lot of specific questions around our deals. So I created a slide here for you guys. But before we actually open up the floor, I see a lot of questions in the chat box. But for what we're doing for our deals is pretty much what I went over, but I'll just kind of put a little pretty bow on it. Our strategy is to buy in growth markets where we own the land and own the brand. And, our third-party management company is going to manage those on our behalf. And we're going to scale to 250 to 300 locations in about 5 years. That's why I put 5+ years. Now we're going to do this through acquisition and development. I've only talked about the acquisitions piece right now. Cash flow, we're offering in 10% pref, 12 to 15% cash on cash by year 5. Actually, we're over 10, we're hitting 10 or above cash on cash by year 2.5, 3. This should be pretty standard across a lot of express tunnel car washes, as long as they don't tie the development into there. And that's what I'm seeing a lot of people do, is they're actually making the investor participate in the development as well as the operational side of the asset. But we don't. We allow our investor to participate in either side or both. Equity growth, we are not capping our investor at all. We want them along with us for the entire life cycle of the business plan, the whole. So we do have a waterfall there, 60-40 to 20% IRR, 40-60 to 30, and then 10-90 after. Tax benefits. For us, I can only speak for us. That's why I didn't put the numbers in the previous slide, but our tax benefits, year 1 loss is going to be about 70 to 90%. So for investors that are selling property or whatever, this can be a really great way to accelerate tax benefits. And exit strategy. Again, our primary exit strategy on our portfolio, we're going for that IPO exit, and then we've got the private equity roll up as a backup strategy and secondary strategy, and then individual sale or portfolio sale of some of the assets as the conservative strategy, I should say. But there's still great returns to be made across any of those exit strategies.
All right, Whitney, we've got a number of questions that are in the chat now. And if you're interested in asking your question, make sure to put it in the chat. We're going to ask them here live. And actually, I'm going to start off with one that's not in there because I'm curious about it. But, with today's interest rate environment, what sort of lending is required in order to fund a business like this? And what do the loans look like that go into purchasing a car wash?
Yeah. So, and sorry, I can't see the chat. So you're going to have to read all the questions to me.
Oh, I'll do that just to, have a moderator's voice in here too.
Perfect. Excellent. So, we have a director of capital markets, Ed Gilmer. He's really our guru in the space. You can get for an acquisition, a stabilized acquisition, you could probably get small business lending, a commercial loan, probably 20-year amortization. You're probably going to be around 5.5, 6.5, maybe 7%, depending on experience. We have access, just because of the size of our company, to also private debt as well. So we can be really competitive on those rates for sure. But
Are they similar to other commercial loans, like a multifamily loan or a self-storage loan?
yeah,
Or
I
is there
mean, you're gonna
industry
have,
difference?
interest only with the amortization period, 20, 25 years. So yeah, pretty similar, but we're doing fixed rate debt. We're not doing any, and that's one of the reasons why we're teasing out the development and the operations, so we can keep those pieces separate, right? So when we do our operations, it's stabilized, it's income producing. We can get better
Right.
terms on that debt.
Absolutely. Yeah, that makes a lot of sense. All right, we've got our questions start off with actually some comments about how common car washes are in Arizona. And so maybe I
Yeah.
can turn that around into a question of, do you have particular regions that you like to invest in? And are there some regions that this doesn't work in? I mean, do car washes in Alaska or somewhere else, maybe, I don't know, maybe they don't work.
Sorry, I was trying to go back to the previous slide, but okay, there we go. As far as like locations, since we were building out the third-party management company, we're really focused on the southeast part of the United States. So, we've gone all the way up from like Maryland, Virginia, down to Florida. That along the coast is going to be the Hurricane brand. As we move into the interior part of the United States, it's going to be the Sparkle brand, because, people in Kansas don't really hurricane, what? It doesn't really land with them, but yeah, this really can work in any area of the United States. Now, I'm going to put like a little star on that. Like, if you've got like, areas that freeze, this is a water driven business. There are going to be other areas that we don't go into either for weather related reasons or tax, some sort of business development reason. But we are looking to expand out of the southeastern part of the United States.
All right, sounds good. It sounds like, at least according to the conversation going on here in our chat, that Southwest is not that area either. One person here, Misi, is actually commenting that she thinks of car washes as discretionary spending. And I guess that goes to the bottom line of how stable is the cash flow on this. And I would even add to that, is there a seasonality to it?
Yeah, there's a little bit of seasonality. I mean, if you think about it, there's seasonality in multifamily and self-storage too, right? Like you have a primary rental season for both of those aspects. Now here's the thing. And I mean, for me, I don't wash my car that often. But for, people that use the car washes, most of the people, let me put it this way, probably most of the people on this webinar are not the people that are going to be using our car washes. So we are not our own customer. So can it be discretionary spending? Sure. However, whenever we've already seen the data prove out in 2008, 2009, 2011, and during COVID, that is not the line item that people are cutting out of their household expenses. They're going after larger ticket items that are actually going to move the needle. One of the feedbacks that we got during COVID, actually, when we looked at the data, is that people went to the car wash as entertainment. Our tunnels and the tunnels, where we're fine. I kid you not. Like they have.
Oh, I know. I have kids.
Yeah, I have it. My daughter, when she was really young, we have a full service car wash in the town that I live in, and even now, when we have one car that has to be, we have a camper van that has to be washed by hand. Anytime we say we're going to the car wash, she's like, "Can I come?" She's like, "Can I come? I want to be in the car." She either wants to see it or touch it. So, the funny thing is during COVID, the data said actually, like, there was a line item that said entertainment. People were actually, that was a form of entertainment for people.
So yeah, we have a car wash that's on the way to where my kids go to school, and on the way home, on occasion, if the car needs it, we'll go to the car wash. And one of the things that we like to do is our little Honda Civic has a skylight area where you can retract the roof, but not the window. So we keep the window shut, and we watch the big brushes go over the top, and the kids love that.
Yeah, there's a movie called Yes Day. If anybody has kids, like young kids, and in the movie, the parent had to go through the car wash with the windows down. That's what the child wanted, and my daughter's praying for that day to happen.
Not gonna happen at our house. We did see that though. It's a fun movie. And apologies if you addressed this. Glenn is asking, what's the margin for full versus self-service? What's your profit margin on a typical car wash?
Yeah, so Express Car Wash, we're buying the locations in our acquisition strategy. We're probably buying them at 50. Their operational costs are probably closer to like 57% OpEx, and we're trying to get them down closer to 40%. So full service, you can't do that, because full service, you have to have an army of people there to wash cars, check people out, dry cars. Like, this really lends to the scalability of the asset. Now, I think a lot of people, like, when we do this, we actually try to retain as much as that current staff as possible and train them. We're not looking to like wholesale the staff and bring in our own staff. We're looking to, really, keep the people there who want to stay on with that transition. We want to train them and we want to keep them there.
All right. John Doe is asking, do we have data that shows the number of car washes has gone up during recessions? And he's also asking, would you share that data?
Yeah, there's a data set there. There's a Detail Pros POS right down here at the bottom of that slide. That is the report that you can go and pull that data from, for sure. So yeah, if you guys want to email me directly, if you're interested in this asset, interested in investing, email me directly, and I'd be happy. I'll ping my car wash team and have them share that article with you.
See, in the chat, we have a couple of people mentioning they have a full service membership for $40 a month, and the drive-through one is $20 a month. Actually, that's a good question to mention. Do you break down your revenue along membership and one-time or ad hoc car washes? Do you know what the difference in the revenue might be there?
Yeah, we're actually really when we acquire a location, we're actually moving them to the subscription model. They're in everybody that's coming in, we're trying to give them like a 1 or 2 month membership for $1, and we don't see maybe like a 15% drop off of those people like moving to subscription. Most people are like, oh great, this makes my life easier. We're also moving away from cash at these locations. That there, like, I don't know if anybody's ever run like a retail business with cash, credit card. There's all sorts of things that can go wrong in there. So we're moving away from that. So this is really a streamlined business that's driven on the efficiencies and numbers of people coming through the car wash.
Mm-hmm. There's some discussion in the chat on the environmental impact of water and water usage. Can you comment on that a little bit?
Yes,
what sort of recycling is put into the business model? Yeah.
So and this is something I'm super excited about, because I'm very much on the left when it comes to environment. At first I was kind of like, ooh, do I personally want to get into this? Do I believe it? Okay, great, it makes money, but like, do I feel okay at the end of the day? Now, what I was really excited to learn as I dug into this is that new build car washes and retrofitted car washes, we're retrofitting all of our car washes, have different standards for water reclamation, cleaning, purification and cleaning at the location level, before you put wastewater into the system, but actually like reducing the amount of water that's used per car wash. I mean, right now the average is 38 gallons. We're not even close to that on our car washes. And we can also reclaim the water and hold on to it. So say like, we can do our part. Say we do invest in, start building locations in the Phoenix, Arizona area. I would imagine that we're going to use a lot of our reclaimed water to wash cars. We're cleaning, we're reducing, reusing the water where we can. Okay. And then like we're recycling all the chemicals out of it before we put it in the wastewater.
So I'm curious, what's the process of recycling the chemicals out of it? Does that happen on the car wash site, or? Yeah,
so we're recycling the water. You don't recycle the chemicals, but you got to clean the chemicals out of the water before you can put it in the wastewater.
Okay, so you have a filtration system on
I can,
site.
yeah. So Cameron actually talked about that on one of our webinars. Let me back out of here and I can go grab that link and drop it in the
Oh,
chat.
yeah, I find that fascinating.
Yeah, yeah. I mean, this is like beyond my pay grade. This Cameron Broom is our managing partner, and just the things that he can do like on these sites is like amazing. And you know, and also there's reduction in electricity costs too. You know, so we're able to impact the environment in a number of different ways.
Any opportunities for solar, just out of curiosity? And I know that's probably on a car wash per car
I
wash
actually
basis.
had somebody approach me directly. I'm like, I'm not the, you know, this is again not what I do. But I, you know, I passed that on to the team and they were excited to have those discussions. But you know, it's all about a cost benefit analysis. And here's the thing, whether the solar was actually used back into the business or it was just like additional real estate to put solar and generate an income stream off of, I think it definitely the potential is there.
All right, next question while you're looking for that. Have any car washes that have gone full cycle?
Nope, we just entered, we picked up our first, okay, so hold on. Our strategy is not to flip car washes or to sell them. We're to buy and hold. We're going to build a portfolio of 250 to 300 units, and then we're going to IPO them. And so we're in the early stages. We closed 16 locations, acquisitions right now, and we're in the middle of our first 2 developments. So no, we're not going to sell car washes.
Glenn is asking, how quickly does your equipment need to be replaced? And I'll add to that, you know, what are equipment replacement costs? What does that look like?
Again, let me find that. I'm
I know I'm asking you for specifics you might not have in front of you.
Those are all the questions that I asked Cameron, and so they're in, there it is. So I'm going to drop in, there's one link. Yep, that's going to everybody. There's the first video I'm putting in there is going to be an operations video. I actually found the chat box. And so there's some of those questions are answered in there. You know, there are part of the value add on some of these locations that we do have to update the equipment. But they, you know, I would say that the equipment probably has to be like maintained and retrofitted. It could probably last like 10 years or longer, but Cameron really goes into that. He touches on it in the operations video. He really delves into it in the development video because that's where we're doing our ground up development. And that was where that question was asked.
All right, Alex has a question about mom and pop car washes versus institutional funds coming in to purchase them. And I guess, do you see a wave of institutional funding coming into the space?
We don't. And primarily that is because, well, and I'll have you, I was reading somebody else's question in the chat. But as far as do we see a wave of institutional funds coming in the space? No, because they, you know, nobody's really set and prepared. You know, we're first to market on building this third-party management company and scaling that up pretty fast. I'm sure we'll have some, you know, competitors at some sort in time, but we haven't seen that competition come online yet. And what was the question about the mom and pop piece?
Oh, he was just talking about mom and pops owning single family homes and then seeing institutional money come into it and wondering if a similar process was going to happen to car washes. And I would say that's happened to self-storage and mobile home parks too. So
yeah, I mean, but you know, that consolidation, I think it's a little bit overplayed on how much institutional money has really come into single family homes. And it's definitely a competitor, but you know, I don't have the data in front of me, but you know, the last time I looked at it, it was, my mind was blown that really like our institutional buyers, they're able to move faster and they're able to be more competitive on pricing, but really at the end of the day, their share of ownership is not that big. We're not there we're not nearly there on that yet with car washes. I mean, like I said, the space is just now being disrupted.
Yeah, I do not have this number in front of me, but I believe that the institutional ownership on single family homes is around 5-ish%. I don't know if that's accurate or not, but it's just a number I heard.
Yeah.
Okay. Oh, insurance. What sort of insurance do you need for car washes? That's an interesting question.
You know, I can get, you know, better clarity on that. That is a great question. But, you know, we are fully insured on the location and we're insured on the income.
Okay. Okay.
That's just what we do on all of our assets. You know, we don't, you know, when Ian came through, like, you know, on some of our assets in Florida, we were well insured, you know, on all aspects. That's not an area that we cut cost on.
Okay. Misi is asking, what sort of talent did you have to bring onto your team in order to break into this market?
Yeah, so we actually, you know, consulted with several, you know, people that already had deep knowledge in this space for a couple of years before we got into the market. And then we brought on Cameron Broom, you know, comes from like a manufacturing and development and operational background. And we probably in his first like 4 or 5 months of tenure, he realized that he actually now had more knowledge in the space than any of the people that we were consulting with. So he's our managing partner. We quickly brought him on and promoted him to managing partner over this asset class. And so, I mean, he's quite possibly the most knowledgeable person about car washes, like in the United States.
And Glenn is asking about accelerated depreciation schedules. You mentioned the 1 to 2 year accelerated depreciation, but the useful lifetime of a car wash, he says 10 years. I don't know if that's what the useful lifetime is or not, but can you comment a little bit about the depreciation schedule? Is all of it in the first 2 years, or does it actually extend over the lifetime?
No, it extends over the lifetime of the asset. But, you know, a large portion is going to be, you know, that first 70 to 90% is going to be, we're going to take as much as we can in year one. And that's the cool thing about book depreciation, business depreciation, is that if you replace an asset, right? I'm not an accountant, you know, I just know in my personal business, when I replace an asset, now I have, you know, I have to recapture a little bit over here, but now I have a whole nother, you know, piece of equipment that I can depreciate.
All right. And I think, oh, one last question from Jeff so far. The younger generations tend to own fewer cars. Is this going to be, I'm rephrasing his question, but is this going to be a problem to the business model?
You know, maybe in 70 years, perhaps, you know, but, you know, like everything, it has its cycles, you know, that's not something that's factoring in right now. And at some point in time, the younger generation realizes that they need a car. Maybe they move out of the city center, or they get married, they have kids. You know, now I know a lot of the people, this sounds bad, sorry guys, but the way I relate to this is that a lot of the generation are my babysitters. And, you know, they didn't have a car, they had an Uber here, like, you know, 4 or 5 years ago, but now they've gone off to school and they have a car, or, you know, so, you know, I think there's a period of time that might be true for somebody, but at most, I think a large part of those people are going to kind of grow out of that.
And
I shouldn't
soon they'll
say
be
grow out of that.
driving.
That's really unfair. I think their lifestyle is going to change and they will probably take on some sort of car. You know,
And some of those people might actually drive minivans.
Right. And you also have to think about, you know, that's kind of a global generalization, you know, across the United States. We're certainly going to be in those markets where it has a higher traffic count, you know, so, you know, even if you have like a strong proponent, this is where I get geeking out about data, like a metropolitan service area with a submarket, and there's a strong person, you know, say like a college in there, and a lot of people do Ubers. You know, if you're on the right corner of town where there's a high traffic count coming by, that's what's driving your business.
Just out of curiosity, do you tend to have more business on a weekend or during a weekday? Are people doing it on their way home from work, or are they going out on the weekend saying, "Hey, kids,
way home and the weekend"? Mm-hmm.
Okay, so it's fairly equal in terms of usage. Okay.
Well, I don't know about equal, but those are going to be the high times. Yeah.
Okay. All right. Any other questions from the chat room, or feel free to take yourself off mute and just ask. And if not, Whitney, can you put your contact information up?
Yeah, absolutely.
And so I'm glad we had you in here. I'm increasingly interested in real estate that has a business model attached to it. And I think that you know, the lifeblood of real estate is cash flow, and finding ways to make that cash flow work is going to be key to moving through any sort of economic time.
Yeah,
Absolutely. Here we go. I'll put
I
this
can ask a question, and I think it's the having the business on top of the real estate is very interesting for sure. And additional cash flow comes with additional risks. How entrepreneurs gets rewarded, more processes is more risks. I was wondering, from learning, you know, kind of break into this market and continue to grow a large portfolio. What are some of the learnings you had as a company about, because you know, while it's nice to learn and consult with people, some things you just, until you step into it, make a mistake and learn from it, you won't know.
Yeah, definitely. Yeah, we just had our directors meeting. My gosh, it seems like an eternity ago. It was just last week. I've done 3 trips since then, three business trips and presentations since then. But we just had our directors meeting last week, and Cameron gave an amazing presentation on around the development of the car wash business. And one of our biggest learnings was just you know, because when we're one of those the disruptors coming in, one, trying to scale a property management company, two, trying to tech enable a lot of these locations. And you know, I think it was those were kind of our 2 different I shouldn't say hurdles, but really our challenges is like, how do we actually do this? Because we have a tech-enabled self-storage, right? And so we layered on that same tech. But then we realized, like, oh, we got, these people aren't locked into a month contract. We have to market to them time over time and time again, right? Like, how do we, you know, continue to do that, right? So now we got to collect names and emails, oddly enough, right? And then, you know, training was a huge crux when we started scaling the property management company, because we wanted to keep the team that was currently, if they wanted to stay, we wanted to keep them on, which meant we had, I don't know if anybody has ever owned a business before, ground up business, you inherit a team. Sometimes you have to break old habits and create new ones. And so that was kind of a crux as well. You know, those are probably like the 2 big learnings. We're I think well past that. The other learning that we're getting into right now is going to be the seasonality of the asset. You know, how does our tech-enabled business really operate during, you know, the winter time? Like, we've put this new brand on, you know, so we're building out that T12 in a lot of these locations. So the next like 3 or 4 months are going to be, you know, going through the holiday season is going to be pretty telling, but we've learned incredibly fast and have adopted a lot of things that we need to, not only at the property management level, but on the local level, in order to be able to thrive.
All right, next week, we are going to have an open group discussion for our club, talking about end of the year issues. And after that, we're talking about data-driven short-term rentals on the 11th, global equity markets on November the 18th, and December 9th, we'll be talking about property management in Portland. So, hey, everybody, could you take yourselves off mute? And thank you, Whitney, for being with us today.
Thank you.
Yes, my pleasure.
Thank you, Whitney. Great presentation.
Yeah, you're very welcome.
Thank you.
Thank you.
Thank you, Whitney.
Thank you, guys. My
you.
contact information is in the chat. If you guys want to reach out to me directly, I would love to, you know, to talk more.
Thank you, Whitney, for being here. Have a
You're
wonderful day.
welcome.
Appreciate it.
Bye.
Bye.